Hello, today is the 9th of June. Let's take a look at what's happening in the markets and let's try to find something actionable here. So, the first thing to know is that the long awaited correction, or at least pause in this explosive growth that we have witnessed, is finally here. And I know that lots of people are expecting it to be a full-fledged bear market, but few things actually make me cautious in such a bearish mode of thinking. The first one of them is banks. It is very well known that you can't really take the market down unless the banks are going down as well, because well, the financial system is supposed to reflect what's happening and what's about to happen in the economy. And what do we see here? Big banks are actually looking rather bullish here to me. Not like 100% growth stock bullish, but still very strong and completely ignoring this correction so far. So that's the first thing. The second thing is that the second component of a full-fledged bear market are actually semiconductors, and these are holding quite well too. Like it's nothing. Is that a bear market? No. Obviously, each bear market starts with a correction, but it just doesn't have the look of it so far. But banks are a primary consideration at this point. The thing is that this correction is obviously long overdue, and it's actually good that it's happening because corrections are necessary uh, to take place. Uh, because otherwise, like the market is not supposed to be going like this all the time. It's actually quite rare. So that's the first thing to point out. There are also cautionary signs here. And the primary concern for me is this 10-year yield. You can see that it has broke out um, from this descending trend line in this large pennant, or I don't know what's the right the best name for this structure, but still on the rise. And what it means is that the long-term concerns about the economy of the states is starting to really surface in the institutional um, area. And why so? Obviously, I will be repeating this like a broken record for the years to come, but I'm not betting on AI like totally disrupting the labor market, but it will be serious. It will be very noticeable because the exact sphere, the exact business domains which are being disrupted by AI and which are being progressively uh, disrupted progressively faster are like half of the U.S. economy. Uh, Software, content, basically office workers. So that's the first thing AI will disrupt. Some people are thinking about humanoid robots like disrupting the rest of the economy, but in my personal opinion, I don't think that it's a high probability situation for the near future, but that the fact that the white collar jobs are going to be uh, s- transformed, reduced in the coming months and years is it's a given. It's 100%. And the problem is that all these guys and gals they are supposed to reinvent themselves as AI operators and also as small to medium business owners, because with AI, each person is equipped with with the power of like whole departments, be it software development, legal stuff, whatever. But the problem is that not all people are equipped with entrepreneurial thinking, and that's going to be a problem. And this is what's happening here right now, in my opinion. So this is the real concern. Apart from that, I don't see many signs of deep trouble in the market. And I also can point out few two actually interesting situations before we will go and take a quick look at crypto. So the first name is Billion to One. It's a diagnostics company. It's a very potentially very fruitful space to be developed by innovative companies, because the diagnostics which are present in the medical system now are basically old school, and the um, the basics of that technology was invented in like the in the middle of the previous century. So something my feeling is that some breakthroughs in this area are way overdue. And take a look at the relative strength, like it's an IPO base. It's it is holding well today, and it's a good sign because there was some selling in this market. And yeah, one of the two names I watch really closely these days. And the second name is DRN. And for me, it's a pure hedge. Obviously not perfect because it has this widening action here in the last few weeks, but it's a real estate. It's a leveraged ETF which tracks real estate index of the states, and the index itself is not subjected to office real estate, which is good. And it also has data centers and telecoms in it. So it's like the third grade, third wave trade of AI, and also a hedge because real estate is protective, and at the same time it's leveraged. So it's about to move. It could move really nice, and maybe provide some shelter in this correction. Okay, so with that being said, let's take a look at the world of coin. And here everything is quite sad. Like the first lesson here is technical. These trend lines sometimes they just work. Like there is another trend line here, and here we got this one, and yeah, and another one here, and yeah, it's a trending market, but the problem is that it's trending downwards, and the problem, the fundamental problem with it is that the blockchains that were there when it was created aren't necessarily the ones which will be used in the future implementation of decentralized finance. Uh, there are newer players in the field, and they are faster. And by faster, I mean hyperliquid. Not only it is an on-chain exchange, it's also the technology which allows for the creation of a purely um, competitive solution, competitive to centralized finance, I mean. And obviously, Bitcoin, uh, Ether are testing and are actually making lower lows, and Hyperliquid, is making higher lows. And that's basically the only story in this space that is interesting now, and it should be you should pay attention, in my opinion, because just look at this. Everything is very weak, very weak, and such relative strength is exceptional in market conditions like this. So obviously it could go down quite a bit, but personally I think if it's not a full fledged bear market, We will see lower lows and stabilization, maybe somewhere near the previous highs in the coming days and weeks, but we'll see. Well, that's it for now. Take care, and let's be in touch.